Hey everyone, welcome to today's video. So the Polycab stock is making headlines for last couple of days and the stock has plummeted down at a rapid pace. So in this video, we'll be covering about four main points about the Polycab. First, we'll discuss about the Polycab business. Second, we'll be discussing about the reasons why the share price is going down at such a dramatic pace. Third, we'll be analyzing the fundamentals of the company and we'll be predicting about the stock what can happen in the near future. And fourth, in the end, I'll be discussing about one of the major mistakes that retail investors make while investing at this kind of situations. So let's get started. First, let's understand what the Polycab company do. It is majorly involved in the manufacturing and selling of wires, cables, and most of the electrical goods. This company was started from 1996 but was made public in 2019. So in the last couple of days, you might have seen that the news headlines are flooded with the income tax rate in the Polycab company. So here you can see multiple articles that are discussing about this issue. But this is the main article that I found which discusses about the reasons why the income tax department has raided the Polycab company. So according to this article, the company has around 1000 crore rupees as unaccounted cash sales. So basically this company is involved in tax evasion and it is not proven till now that if it is the reality, the case is still going on, but no one knows what can happen in the future. This is one of the main reasons why the stock is going down at such an incredible pace. Let's learn about the chart, what the chart says. So the company was made public in 2019. This is the time when it was made public, and around 2020, if we see how much the price is around 800 something, close to 800 in 2020. But if we see here in end of 2023, the stock price is around 5800. This is more than 6x growth. But currently the price is around 4000. Now if we discuss this as well, this is also around the 5x growth. But if we see the fundamentals of this particular company, now let's do the fundamental analysis of this company. So first, let's see the profit and loss of this company from 2020 to current. So the sales in 2020 were 8000 and at the current moment it is around 16,000, which is a 2x growth. Similarly, if we check the profit is around 766, which is 800, and this is almost around the 2x growth. So here we see the company is 2x in it, but if we look at the shareholding pattern, here we'll see some kind of some other scenario. So in 2020, the shareholding pattern was 68%, but currently it is 65. So the promoters are cutting back into the company. This is a red flag. Okay, so this was the shareholding pattern and the profit and sales of the company, but this can be a probability that maybe it is not directly related to the profit of the company, that the stock price is going this up. But if we see the PE ratio of this particular company, we'll see that in 2020 it was fairly priced. But if we check at the current scenario, the PE ratio is around 50, which was showing that the stock is currently overvalued. And if we see here, in around 2022, the PE ratio was around this, which was then corrected at that time. So here there was a bit of correction, but if we just look at fundamentally at the stock, we can see that the profits and the sales has grown around 2x, but the stock price has gone about 6 times as compared to 2020. This is a red flag because the markets are at all-time high And there's a possibility that because the markets are overvalued, these kind of stocks are also overvalued because of that. But the main question here is, should we invest in this company at this particular time? Because many people are thinking that the stock prices has gone more than 26% down in last few days. It is at a bargain. Like, it was previously trading around 5800, but now it is 4000. It can be a possibility that we can buy the stock at this pace at a bargain. But I believe this should not be done because the income tax rate has opened other few possibilities. It can be possible that government can put some high charges on this company which can cause the share go down more, or there can be a possibility that it can also blow up, but no one knows about that. But at this particular time, we should not be investing just because the share is down. It is highly likely that it can go down more. Second, the mistake that the retail investors make at this kind of time is that people invest based on news. So the news is coming up that the stock market is going down, income tax has raided, because of which it has gone down, but it is not sure that the company was involved in tax evasion. So this is the right time to buy the stock. But this is not a right kind of mentality when you are investing in the market. So here I have one of the great investors, and in this video, if you're interested, you can check at this particular timestamp, 25 minutes or something. In this particular video, Peter Lynch, he's saying that the stock can go down and you cannot predict if it is going to go down or up, but you have to understand what the company is doing. And taking in account of all the fundamental analysis, the company was overvalued. It has to be corrected. But because of the tax evasion charges on the company, it can be a possibility that company can go bankrupt, or the government can put some charges on the company, or there are hundreds of possibilities that could happen, and the stock price can go maybe to zero, or the other possibility is that it can go up as well, but it is quite unlikely. So in this particular time, we should not be investing just because of what we are seeing in the news, but we should be looking at what the government do on these charges, and what are the fundamentals of the company, and what are the plans of the company has in the future after all this issue is resolved. So if you like the video, please make sure to subscribe, and I'll meet you in the next one.